Alright guys, so welcome to another episode. And how was your trading week? So if you watched the previous episode, you remember I called out this opportunity on gold and I was looking for a buy opportunity on this pair. So we actually had a buy on this pair, so around here. I got in around here and I sent the update about this trade in the Discord channel. And you can see the trade management and everything, and at every step I kept updating the group on what I'm doing and how I'm managing the position. The account size I used on this was a very small account, and I believe most people watching me or most people coming on here, you probably have a small account as well, let's say $100. And you can see this was an account of about 100, and once this played out to like here, so I managed this position to like here. I got stopped out when price reversed around this area, but you can see we made almost $500 or $600 from this trade option. And it's just to tell you, it's not about the account size and all of that, it's about the skill. So if you have the skill, it becomes very easy. It takes a lot of time, it takes patience, and if you can replicate this move on $100 account, you can do the same thing on $1,000 account. You can do the same thing on the $10,000 account. So you need to be patient. You need to spend more time on looking at the charts, back testing, and just getting good at what you do. So that being said, let's dive straight into the analysis of today. Alright guys, so let's start with the DXY, and let's analyze the DXY from the daily, the 8-hour, 4-hour, and the hourly time frame. And it's very important you do your analysis on the DXY, because if you have the analysis on the DXY correct, then it becomes very easy for you to have good positions on other currency pairs or other asset classes. So when you look at the DXY from the daily time frame, we had prices putting in, say, a downtrend. You had prices doing this, you had a pullback, you had this got breached last week, and we had prices moving to the upside. So what's most likely going to happen on the DXY? It's say a pullback to an area like 104, an area like this. Let me make this bigger. So I'm expecting a pullback on the DXY to an area like 104, like right here. And the reason I'm saying so is very simple. Psychological numbers are key to my analysis. It's key to everything I do, and there's not a lot you can talk about this, because say when you look at previous price action like right here, every time you have a move to the upside, you see prices coming back to an area like this to test it, and then you have a move to the upside. So you have another one here, you had a move right here, you had prices testing this area, and then you had a massive move as well. Let's look at this one. You had this move, you had this, and it's easy for you to say price went above this, but then it had a test of this area and then a move to the downside. So if you use the same principle, it's easy for you to anticipate or to say there's a high possibility that prices will test an area like this, and if you see a rejection around this point, you're most likely going to see prices rally to say 105. And that's simple and that's easy. Another possibility is for price to get to say 104, and depending on how the sellers come in, you might see a breach of this area, and again a test of this area, and then a move to the downside. It's that simple, it's that easy. It's not a lot you can do, and you have to keep it simple like this, guys. Just keep it simple and move down to say other time frames to see if there's anything that makes sense. So when you move to the 8-hour time frame, for example, we're right here on the 8-hour time frame, we're looking at the same piece of price action that happened on the daily time frame, but this time it gives you more price action, like the details of it, like you just have a lot of data for you to deal with. So on the 8-hour time frame now, you can see that there's a possible uptrend that is building up here. So we had the first thing we was looking at is just basic for price to say test an area like 104. But as you move to lower time frames, now on the 8-hour time frame, and you see this possible trend that is building up, when you combine this with the fact that there's a high possibility for price to test an area like this, looking at just price action from a trend line, it's very powerful trading trend lines as well. So you have a bounce or a touch of this, price moves up. You have a touch of this, price moves up. So for this to continue, for this uptrend to continue, we need to see prices pull back to this potential trend line that is building up right here. And if that happens, then you might have the DXY drop to say 104 and then a move to the upside. Or it drops to 104, you get a breach of that area, a test of 104, and then you see prices drop to the downside. So you can look at it again from the 4-hour time frame to see if it makes sense again, and if there's anything that you can pick up. And that's why it's important, guys, for you to do the forecast on the weekends, because you're preparing yourself for what's going to happen next week, and you don't get caught up with surprises and all of that, because you're looking at price and you're bringing out all the scenarios that can happen. So you're not stick to one bias. And that's why for me, it's easy to take a buy, it's easy to take a sell. It depends on what price is doing, it depends on what price is telling me. And I don't get fixated on a certain bias and stuff like that. So when you move to the 4-hour time frame, all we're trying to do is look and see if we have any clues. It's very important, any clues. And I'll pull this area right here. This is an important area for me. So the reason I'm saying this is an important area for me is because we will step down to the hourly time frame and see what is actually happening right here, to see if there's any clue as well that prices is going to drop to the downside. So just looking at it from the 4-hour time frame, I'm looking at this massive sales that came in. Then we had a reaction from the buyers taking prices to the upside. Now, when you watch the previous candles, you look at this candle, you look at this one, and as price moves progressively to the upside, you realize around here there is that slowing down in terms of the sizes of the candles and certain things. So it just tells you the buying pressure that came from the downside, as we progress to the upside, it seems to be dying progressively. You can see sellers stepping in here with the black candle, and you have another seller right here. So compared to this piece of price action here, you had no black candle, so you really didn't have sellers in there. You had buyers dominating during that rally to the upside. But right here, you have these sellers coming in. So that's a clue already. So you need to pick up clues like this when you do your market focus. And it's important, you're looking at price, you're looking at every piece of price action, and you're trying to make a decision from it. So it's very easy for somebody to say, if you have prices moving to the upside, then you wait for a pullback. Yeah, that's what happens. That's the basic. That's price action 101. But what can you add on this? What else can you bring in to supplement your argument? And you have to look at price. You need to zoom in. You need to pay attention to everything that is happening. Because trust me, yeah, there's a lot of people that will look at this piece of price action and they're not even going to pick out what is happening right here. So there's a lot of clues you can look at. There's a lot of clues. So let's step down to the hourly time frame and see. So now on the hourly time frame, you can tell price is making highs progressively. It's making highs. So what I like doing is when I focus on a piece of price action like this, I like studying this piece of price action. So I'm looking at this buyers that came in. It was very impulsive. And then I'm looking at the sales, and I'm looking at the duration of the sales as well. So as price kept moving to the upside, you can see the sellers. You can see the sellers again, impulsive. So compare the sellers that came in right here, compare it to this one, then compare it to this. So on the 4-hour time frame, we said, or was looking at this area right here, an area like this on the 4-hour time frame, and that's where the sellers came in. So now you can tell already you have massive sellers coming in. So if prices open, when the market opens next week and you see sellers coming in impulsive again, you have to compare this one and the sellers are coming right here. And that's if it happens that the sellers come in. So if those sellers come in, now you have more price action telling you we had sellers coming in right here. That was the first sign. It's very impulsive again compared to what you have right here. So you had 1, 2, 3, 4, 5 candles. Now you had just one impulsive candle right here. And then you had buyers struggling. And if you have another impulsive candle that comes in from the sellers, there's a high possibility we'll see prices getting to this point. So that's just you looking at the candlesticks and everything and trying to make a decision. Another thing you can do is use another concept, say like the trend line. So just ask yourself, if price is moving to the upside and each time price gets on this trend line, you see this massive move to the upside, it pulls back, you get a massive move to the upside, it pulls back, you get a massive move. It's not really a massive move to the upside, and this is a point of concern right here. So at this point, we had this massive move to the upside, eliminating these highs. At this point, we had a massive move to the upside, eliminating these highs. You can have this argument as well. You have a massive move, eliminating these highs as well. Now, at this point, right here, the move wasn't massive, so you have it in like a correction. You see it's slow. If you step down to lower time frames, say the 30 minutes, 15 minutes, you see what I'm talking about. But I don't like looking at the 30 and the 15 minutes. Yeah, but you can tell already this highs got taken out, but compared to this one, it's a very shallow break to the upside compared to this one right here. So look at what's happening right here. We've taken out these highs, but it's very shallow. Another thing, or another point of concern for me, is when we took out the highs here, we made progressive moves to the upside. When we took out the highs here, we had its progressive move to the upside. So the same thing keeps happening, but at this point, we took out these highs and now we're dropping. So you can tell already, like price gives you clues, and trust me, yeah, it's left to you to look at these clues and then you piece everything out. So there is a high possibility the DXY will drop to an area like this, and it might even go deeper than that. But it's not my concern to tell where the DXY is going to drop to or how much of a distance it's going to cover. All I'm trying to do is just anticipate. And I could be totally wrong. Like next week, trust me, prices might come in and you see a move like this to the upside, and that's fine. But I've done my analysis already, I've done my forecast, and I have something I'm looking at, or there's something I'm anticipating. If it doesn't happen, that's fine. But if it happens, that's where we make the money from, because if this eventually drops as we're anticipating, then we'll step down to other pairs, other asset classes, and look for opportunities right there. So as I was saying, guys, so if price gets to this point, so we're looking at this bridge right here from this candle, and let's say for some reason the buyers decide to come in again and we see prices step back into an area like this. This move invalidates the previous idea we had, say, for prices to drop to 104. And what it does is it gives me a new perspective as to what is most likely going to happen. And that is simple. I'll just expect a pullback to test the trend line again. And then we see prices get to this point, say 105. So you need to have your anticipation in both directions, and try as much as possible not to get fixated on one bias or one direction. So price is going to do what it wants to do, and all we can do is just anticipate, and then you wait and see if it's going to fall in your direction. And if it doesn't play out in the initial direction, which for mine right now, stepping into next week, I'm looking for this sales on the DXY. If this doesn't happen, then I know already the buyers will most likely test areas like 105. And that's it. That's it for the DXY. It's quite easy. As I said, there's not a lot we can do on the DXY. But let's look at another asset class and see if there's a possibility for us to take any opportunity on this from last week. Now, let's look at gold and see. So we had this massive move to the upside on gold, and I had this buying opportunity on gold. So the big question is, am I looking for an opportunity on gold coming into next week? I'll say no really, because the price action on gold right now, it doesn't look really good. And you have a lot of people stepping in on gold and probably trying to buy or sell. But what I'm going to tell you is be a little bit careful, because we had this massive move to the upside. When you look at it from the daily time frame, we had this massive move to the upside. And this is what is very important when you do this market forecast. Let's say you're looking at the hourly time frame only. I'll put this right here. If you look at the hourly time frame only, it's easy for you to say price is moving to the upside impulsively. So you're waiting for this pullback to come in, and once this pullback ends, you're looking for those opportunities to buy to probably make new highs. Now, if you look at the hourly time frame only and that is your analysis, then that's correct. But when you look at it from multiple time frames and you have a daily time frame, pay attention to this rejection that's happening right here. So the daily time frame tells you we've had a test of this area of 2,200 and price is rejecting from this point. So there's a high chance, there's a high possibility for prices to drop to the downside to what? To say 2,100 right here. The difficult thing about an analysis like this is it's quite difficult for you to tell how price is going to drop from 2,200 to 2,100, but you can wait and give price some time for it to give you more price action. Try as much as possible not to get caught up in this idea or this routine of trying to take trading opportunities every time. So there's certain times when you look at price action, it's really not good for you to take a trade on. And gold is an example right now. I'll probably not do anything on gold unless price moves impulsively and shows me something, because we could get to an area like this. So price could get to an area like this and it goes through, and then we'll wait for a pullback and look for those sells. Now that is valid. But looking at it right now, I'll say just hold on a little bit. Just allow price to give you more price action, but there's a high possibility we'll get those sells coming in. Yeah, because when you have a massive move to the upside, price turns to give you like pullbacks. And again, we had a massive move to the upside and we see price almost consolidating around here. These are clues just to tell you the move to the upside might be fading off, and it might be time for us to go in with these sells on gold. And this is what makes it very interesting. Let's say you didn't take this buying opportunity from here to here. With the way price is setting up now, there's a high chance we could have this massive drop on gold to an area like this, say 2,100. But we need more price action to see what's happening. Already, you can tell, massive move to the upside. There was a pullback. Yes, we had prices going above this area, but once we got to 2,200, there was this rejection and prices just coming back down. If you needed buys to kick in, then we could see, say, an impulsive move to the upside, but that didn't happen. So once we got here, we just had sellers stepping back in, and we might see some consolidation coming in. And I really don't know, but this, you just have to wait, guys. Wait and see what's going to happen. Try as much as possible not to get caught up in this whole cycle of, oh, I need to take a trade today and all of that. So with gold, I'm just going to wait and see. Is price going to breach this area? And if it breaches this area, then you just wait for that pullback test, and then you take these drops to the downside. Yeah, so that's it for gold. And let's look at, say, US30. So US30, this is a nice one. So basic price action again, guys. Basic price action. When price moves to the upside, you wait for those pullbacks to come in, and then you look for buying opportunities. Or if you have price moving to the downside, you wait for the pullback, and then you get selling opportunities. Now, the important thing about US30 is this piece of price action right here. So when you look on the daily time frame, you had this massive sales that came in on Friday, and this massive sales had like an offset with this buying pressure right here. So we had prices buying to the upside on everything. I'll show you on the 8-hour time frame what I'm talking about. So we had prices moving to the upside. So you had this move, there's a minor pullback, you had a major move to the upside. There's a minor pullback, there's a major move to the upside. So normally, if the uptrend had to continue, so when you study price action, what happened before tends to happen as price is progressing. So for example, if you had a move like this, minor pullback, you expect another move, minor pullback, another move, and then a minor pullback. So when you see something that's opposite to what's been happening, it's a point of concern for you. So if you have this minor pullback, a move up, a minor pullback, a move up, and a massive drop, that's different. So already that can tell you price is trying to step to the downside, or the sellers are trying to come in. Let's add one other principle on this. You have prices moving to the upside, you have a massive drop. So once you have an impulsive move that comes in after a move to the upside like this, wait for a correction and see if the sellers still want to take prices to the downside. Now, I'll show you something about US30 that's very interesting. So when I did my analysis on US30 before recording, you can tell right here, price was consolidating within this area. And this is very important because you need to understand how price moves certain times. And I'll show you something real quick. So if you have prices moving to the upside, for example, and you have a consolidation. Now we're looking at US30 and saying price is going to sell. When you understand how price moves, you can combine certain principles and just reinforce your anticipation or your bias. So looking at it from the first concept we just had prices moving to the upside, then we had an impulsive move, step in, and then we're looking for that correction and move to the downside. Now I'll show you another principle or another approach you can use right here. So when you have prices moving to the upside, you have a consolidation that steps in, then you have a massive move to the upside. What tends to happen is a move back to an area like this to test this area, and then you see prices moving to the upside. And this is common, yeah, it happens all the time. But then you can combine this and certain principles to help make your anticipation more valid, for example. So we have two principles we're looking at right here. You have this move to the upside, you have this consolidation. There's a possibility that price is going to step back to an area like this. If you focus on this piece of price action only, then you have prices moving to the upside, you have an impulsive break, so you're waiting for that correction for prices to make a move to the downside. You can add a third one as well. So there's another thing you can look at or you can add. For example, let's look at this. So if you step down to the 4-hour time frame, you see prices moving to the upside. So now you have this area, there's a trend line right here, massive move to the upside, pull back, massive move to the upside. And right now we see prices almost breaching this area. So if next week, let's say next week, we see prices do something like this, then we could expect the move to the downside. So you see, you're combining certain things. So when you do your market focus, you're looking at every piece of price action. Previous price action is going to tell you what price is most likely going to do. So you can use a concept like this. There's a consolidation, break, possibility for price to test this area. You can use this, there's a trend line moving, there's a break, there's a move to the downside. You can use another concept, there's a psychological number here, there's a psychological number here. If price tests this area and it's difficult for it to go past this point, then we see prices step into the downside. Now you have three things you're looking at, telling you there's a high possibility for prices to drop to the downside. Now you can use your entry criteria, you can use your strategy, you can use any concept you want and look for those selling opportunities on US30. And it's the same thing with these other asset classes like NAS, S&P and stuff like that. So we'll do an analysis on NAS100 real quick. So NAS100, again, you have a consolidation right here. Now with NAS100, it looks a little bit different compared to what we had on US30, because the consolidation is happening right here, but on US30 we had a move to the upside, we had a consolidation and a massive move to the upside. So with an example like this, you're expecting prices to pull back to an area like this. Now with NAS100 is different. So NAS100, you have prices moving to the upside, you have a consolidation, and then you have a shallow break to the upside. Now this is different compared to US30, because we could expect sales to come in on NAS100, but then this sales will simply move back into this range that's forming right here. So next week you should expect prices to drop back somewhere within this range before attempting the buys again. So look at US30, you have this range right here. Let's look at it from the 8-hour time frame. You have this range right here. You had a massive move to the upside. You have this trend line coming in. There's a potential that this will get violated. You get a test, and then you have prices dropping back to areas like this, or even going in deeper. On NAS100, let me make this big on the 8-hour time frame. So on NAS100, you have a consolidation right here, and you have a shallow break. So with this one, I know if sellers are supposed to come in, then we have sellers testing areas like this. So NAS100, you're looking for these selling opportunities. US30 as well, you're looking for selling opportunities, but the price action is a little bit different. But all these pairs are showing you that there's a possibility that sellers are going to come in. So once you have this information, once you have these clues, you start piecing these things together. You're taking clue number one, clue number two, you just put everything together, and then it makes your analysis very easy. So I'm waiting for potential selling opportunities on NAS100 for next week, and let's see what's going to happen. Now price might get to an area like this right here. Price might pull back to an area like this, and you see prices move again to the upside. And I keep telling you, try as much as possible not to get fixated to one bias. And let me show you real quick why price might do something like that. So in as much as we have this range that is forming, and there's a possibility for sellers to come in a little bit deeper, you must understand as well, there's a possibility for price to get to an area like this, and you see prices moving to the upside. And you see, when you do a forecast here, you're looking at price action, you're looking at every piece of price action, and you're looking for clues. So this looks like a range, and there's a shallow break, and there's a high possibility for prices to trend back to an area like this. At the same time, you have this looking like an uptrend, and there's a high possibility for prices to go to the upside. Now, how do you combine this? So let's say you have this range building up right here, and you're anticipating, say, prices to drop to an area like this, or let's say an area like this. And next week, you see prices violating this trend line. Now, if this happens and price starts trading outside, this is massive, guys. Trust me, this is massive. So first of all, you've had this shallow break, and you know if price is moving to the upside and you have a range like so, and there's a shallow break compared to what we have on the US30, this is going to come in deeper. But on US30, for example, you have that range, you have a massive move, so the sales might just come into an area like this. So now you know what you're looking at or what you're expecting. And if you get this breach right here and you see prices testing areas like this, now you can take those sales with much more confidence, because you know already, guys. Like, I don't know if there's a lot I can tell you, but do your market forecast, because it's going to help you. It just gives you every possibility that you can see, and I think there's a lot more that we can talk about, but let's try to keep it simple. And that's it for NAS100. So if you see something like this, you see that breach, you see this test, then you might get prices dropping down. So you're combining the fact that you have this range that is building up, and you have this trend within this range again. So that's another concept we can build on, say, during other videos, or just go in depth on that. But we're just doing a market focus, so there's no need for us to spend much time on this. Let's look at the S&P 500. S&P 500, let's see, nice one as well. So look at this, the S&P 500 and US30 have a similar move. So basic principles again, you have a range that is building up on the daily time frame. I'll make this bigger. You have a range that is building up on the daily time frame, and when you look at price action like this, you have prices moving to the upside, you have a range. When this happens, you look at the break. It's an impulsive break, so you're like, there's a possibility that price is going to test an area like this. Now you have this psychological number here, you have this area here. So the question might be, where is price going to drop to? So is it going to stop at, say, 5200 or to an area like this? Again, that's not my concern. All I need to see is that drop to come in, because I know if price has to drop to this area or this area, all I need to do is position myself within these cells, and that's it. So the S&P 500 and US30 have a similar move right now. So they all have this range and then a massive break. So we're expecting prices to come to the downside. Another thing you can do is look at it from lower time frames and see. So let's say you have a move to the upside, you have this range, you have a massive break. Focus on this piece of price action right here, because on lower time frames, this is going to put in, say, higher lows, higher highs, higher lows, higher highs, higher lows, and you see if there's a break of this or there's a breach of this area, then it just gives you more confidence that price is going to drop to the downside. So if you have an uptrend and it gets violated, then prices move to the downside. So you're combining that with what you've seen on the daily time frame. For example, you're having a range and you're expecting prices to drop to the downside. Guys, there's a lot of concepts you can use. when you do the forecast, there's a lot of concepts. So here you have a range, you have a break to the upside. Just using this concept, you're expecting prices to come back to an area like this. Now, using another concept, just say every time you have a breach of a psychological number, you should expect prices to test these areas, and then you wait for a reaction from this. It could be a rejection and then you see prices move to the upside, or you have a successful break of this area and you see a test and then a drop. So there's a lot that is pointing in the direction of the sells. There's a lot. So you have this concept right here, move up, consolidation, break, pull back to an area like this. You have another concept, you have a psychological number right here. Once you have a break, always wait for this retest. That's another one. If you step down to lower time frames, let's say on the 8-hour time frame, 4-hour time frame, or even the hourly time frame, you could see an uptrend. If you see a breach of this, then you probably see a move to the downside. So you combine this, and this, and it could help you take selling opportunities on the S&P 500. So we can move down to the 8-hour time frame real quick and see. Oh, this is messy. So let's see on the 4-hour time frame. So guys, this is what I was talking about on the 4-hour time frame. So right here, you have this move like so. If this happens, you're expecting the sells, but you know there is a range right here. So these sells could even drop to an area like this. So it's not really difficult. You're just combining certain things. And let's say for some reason this sells don't happen and you have prices moving to the upside. Now you know why prices is moving to the upside, because you have this area, you have this uptrend, and price is still respecting the uptrend. So if price keeps respecting this uptrend, it's most likely going to test an area like this. It's quite simple, it's straightforward. Try as much as possible not to complicate it. So let's look at US oil. So US oil, I think this is the simplest of them all. So I'll just stick on the daily time frame for now, because we've been talking about US oil, say, almost every week. You have this move, you have a pullback to an area like this, you have a breach to the upside, pull back to this area, breach to the upside, pull back, breach to the upside, pull back, breach to the upside. So again, we're just waiting for the pullback to an area like this. Now you could see selling opportunities on US oil, say looking at the 4-hour hourly time frame and the 8-hour time frame. I'll probably step down to those time frames just to show you, but I'm expecting a push to say this area right here to like 80, and then a rejection around this area and a possible move to the upside, or a breach of this area, test, and then a drop to the downside. So it's quite easy for US oil. So let's step down to the 4-hour time frame and see. Now on the 4-hour time frame, let's focus on just this piece of price action right here. You had this move, price making highs, and as I tell you guys, when you have a move to the upside, say a trend line, for example this, and you get a breach, expect prices to drop reasonably to the downside, giving you another trend, and then a possible break, and then a move again to the upside. So price keeps doing this thing, uptrend, downtrend, uptrend, downtrend, consolidation and stuff like that. And it can become really, really complex, but let's stick to this. So again, this piece of price action right here. So we're looking at this. So you have this uptrend that got violated. So we've had prices putting in highs and lows, and so we should expect prices to move again to an area like this, do something like this, so giving you this perfect downtrend. And again, price might not do it, because when you look at this again, you have to position yourself for every opportunity that comes in. So let's say prices decide to reject around this point, and normally we're expecting sales to come in. So if the sales don't come in, what else can you look at? What other clues can you look at to tell you that price is going to go to the upside? You had these sales that came in, you had a simple move to the upside, then you had a drop to the downside. We've had this, so I'll make this bigger. We've had this move to the downside, we had a pullback like so. So we normally should expect prices to make a new low right here, but price found it difficult to make a low right here. We've had this move to the upside, price found it difficult again. So right now it's like a range that is forming. But personally, I have my strategy, I have my approach, and I know what I'm looking for within this piece of price action right here. And I'll step down to lower time frames during the week, and I really know what I'm looking at when price does something like this. And there's a setup I'm looking for to take sales to the downside. But I'm combining this with my analysis from, say, multiple time frames, different concepts, and I'm looking at the details of what price is doing. So when you combine all those things, it becomes very easy for you to prepare for the week ahead. So notice I'm not even talking about the strategy. I'm not talking about my edge. I'm not talking about the things I'm looking for to get into the trade. I'm just looking at the possibilities that might align next week. So that's it, guys. There's not a lot you can do. Just do your focus, be patient, and let's wait and see if there's opportunities that we can take next week. So if you like this video, if you found this interesting, if you find this content helpful, don't forget, hit the like and subscribe button, and use the comment section. Tell me what pairs you're looking at or what pairs you're having difficulties with, and we'll probably include that during next week's market forecast. All right, guys, thank you. See you during the next one. Bye for now.